Have you ever wondered why two traders can look at the same chart, use the same strategy, but end up with completely different results? One makes consistent profits, while the other blows up their account. The difference isn't always the system, it's the psychology. Trading is not just about numbers, charts, or indicators. It's about the mind. In fact, the biggest battles traders face are not on the screen, but in their own heads. Fear, greed, overconfidence, hesitation, and even boredom can destroy a trader faster than any market crash. In this series, based on the insights from Millionaire Traders by Lien and Boris Schlossberg, we're going to explore the psychology behind successful trading. You'll discover how millionaire traders think differently, how they control their emotions, and how you can adopt the same mindset. So grab your notebook, because this is not just about trading tips. This is about training your mind to win. Lesson 1. The Trader's Mindset. The first thing that separates successful traders from struggling ones is mindset. Millionaire traders don't see trading as a way to get rich quick. They see it as a business, a craft, a profession that demands discipline. Most new traders enter the market with fantasies. I'll double my money in a month, or I'll quit my job after one big win. But that mindset leads to reckless decisions. Real traders think differently. They accept risk, focus on process, and know losses are part of the game. One trader in the book explained it like this: trading is about survival first, profits second. If you can survive long enough in the markets by managing risk and controlling emotions, the profits will come. Think about it like farming. A farmer doesn't plant seeds today and expect a full harvest tomorrow. He prepares the soil, waters the ground, waits patiently, and accepts that sometimes the weather won't cooperate. Trading works the same way. Patience, discipline, and consistency matter more than quick wins. Lesson 2. Controlling fear and greed. Fear and greed are the two emotions that rule most traders and destroy them. Fear makes you close trades too early, afraid of losing profits. Greed makes you hold on too long, hoping for more, until the market reverses and wipes you out. Millionaire traders have learned to master these emotions, not by eliminating them, because fear and greed are human, but by controlling them with rules. They use stop losses to limit damage. They use take-profit targets to lock in gains. They follow a plan instead of their feelings. Here's a simple example. Imagine you enter a trade with a $100 risk. You set a stop loss at that amount. No matter what happens, you don't widen the stop. You don't hope the market comes back. You accept the loss if it hits. That discipline is what separates a pro from an amateur. Greed is handled the same way. A disciplined trader sets profit targets. If their plan says take profit at 2-to-1 reward to risk, they stick to it. They don't move targets mid-trade because of greed. This is why trading psychology is so important, because without discipline, even the best strategy will fail. Lesson 3. Confidence without ego. Confidence is necessary in trading. If you don't believe in your plan, you'll hesitate, miss opportunities, or second-guess yourself. But ego is dangerous. Ego makes you think you're smarter than the market. Ego convinces you to risk too much, chase losses, or ignore your rules. Millionaire traders are confident but humble. They know they can't control the market. They only control themselves. They respect risk, and they never assume they're invincible. One trader in the book said, "The market will always be there tomorrow. My job is to make sure I am too." That means never blowing up your account on one trade. It means walking away when emotions run high. Confidence comes from preparation, studying, backtesting, practicing. Ego comes from pride and overconfidence. The key is to build confidence in your process while keeping humility before the market. Lesson 4. Discipline is everything. Trading without discipline is like sailing without a compass. You'll drift aimlessly and eventually crash. Discipline means sticking to your plan no matter what. Millionaire traders don't risk money randomly. They know exactly when to enter, when to exit, and how much to risk before they even place a trade. Think about it this way. Discipline is like guardrails on a mountain road. Without them, one wrong move, and you fall off the cliff. With them, even if you swerve, you stay safe. Here's a simple example. Imagine your rule says, I will only risk 1% of my account on each trade. If your account is $10,000, that's $100 risk. Discipline means sticking to that, even if you feel sure about a trade. Most traders fail because they break their own rules. They chase trades out of boredom. They increase risk out of desperation. They ignore stops because they hope the market will turn. Discipline is not fun. It's not exciting, but it's what keeps you alive in the markets. Lesson 5. Patience pays. In trading, waiting is just as important as acting. Millionaire traders know that no trade is better than a bad trade. Most new traders overtrade. They think if they're not in the market, they're missing out. But patience is a weapon. It means waiting for your setup, waiting for your edge, waiting for high probability opportunities. Think of a sniper. He doesn't fire at everything that moves. He waits, stays still, and only pulls the trigger when the target is perfect. That's how professional traders think. There's a saying, amateurs want to trade all the time. Professionals want to trade at the right time. Patience also means accepting that some days the market gives nothing, and that's okay. Walking away is part of the strategy. Lesson 6. Adapting to the market. Markets are alive. They change, evolve, and shift moods. What works in one season may not work in another. Millionaire traders know this, and they adapt. Think about 2008. During the financial crisis, volatility exploded. Traders who thrived were those who adjusted their risk and strategies. Those who stubbornly clung to old methods were wiped out. Adaptability doesn't mean changing your plan every day. It means being flexible when conditions demand it. If the market is ranging, trend-following strategies won't work. If volatility is high, smaller position sizes may be needed. In other words, don't fight the market. Flow with it. Respect its rhythm. Here's a key truth. The market doesn't owe you anything. It doesn't care about your hopes, your system, or your goals. You must adapt to it, not the other way around. Lesson 7. Managing expectations. Another critical aspect of trading psychology is managing expectations. Too many traders think they'll make 100% a month. They expect to win every trade. And when reality hits, losses, drawdowns, mistakes, they get discouraged and quit. Millionaire traders know the truth. Losses are normal. Drawdowns happen. Even the best traders in the world lose trades. The goal is not to avoid losses, it's to manage them. One trader in Millionaire Traders said, I don't worry about being right. I worry about making money. That's powerful. It means you don't need to win every trade. You just need to manage risk so that your winners are bigger than your losers. For example, if you risk $100 and aim to make $200, you can be wrong half the time and still profit. That's the math behind successful trading. So instead of chasing perfection, chase consistency. Lesson 8. Accepting losses as part of the game. Here's a hard truth. Every trader loses money. Even millionaire traders, even hedge funds, even legendary names like Warren Buffett or George Soros. The difference is how they see those losses.
Unsuccessful traders see losses as failure. Successful traders see them as tuition, the cost of doing business. Think about running a restaurant. You'll always have expenses: rent, staff, ingredients. Some food spoils, some nights are slow. Do you shut down the restaurant because of that? No, you manage it as part of the business. Trading is the same. Losses are expenses. They're not personal. They don't define you. They simply remind you to manage risk and move forward. One of the traders in Millionaire Traders said, "My goal is not to avoid losses. My goal is to keep them small." That's the key. Don't fear losses. Fear big losses that break your account. Small, controlled losses are the stepping stones to long-term profits. Lesson 9. The power of a trading journal. Most traders skip this, and it's one of the biggest mistakes. Millionaire traders keep journals. A trading journal is not just about recording numbers. It's about recording your emotions, decisions, and mistakes. Here's why it's powerful. It shows you patterns in your behavior. It reveals emotional triggers like fear, greed, or boredom. It helps you learn from mistakes so you don't repeat them. Imagine writing down after each trade, why did I take this trade? Was it according to my plan? How did I feel during the trade? Did I exit too early? Too late? What did I learn? Over time, your journal becomes a mirror. It shows the real you, the disciplined trader or the impulsive gambler. And once you see your patterns, you can fix them. Millionaire traders use their journals to grow. Amateurs ignore them and keep making the same mistakes. Lesson 10. Detaching emotions from money. Here's one of the hardest lessons in trading psychology. Stop treating money emotionally. For most people, money is tied to survival, comfort, and identity. Losing money feels like losing security. Winning money feels like power. That emotional roller coaster destroys traders. Millionaire traders train themselves to see money differently. To them, money in a trading account is not for bills or rent. It's simply trading capital, the tool of the business. Think of a carpenter. His hammer is not precious, it's a tool. If one breaks, he gets another. A trader must see money the same way, not as identity, not as security, just as the raw material for trading. This detachment protects you from overreacting. If you lose, you don't panic. If you win, you don't become arrogant. You just follow the process. One trader said it perfectly. When I detach money from my emotions, I trade the plan. When I attach money to my emotions, I trade my fears. Lesson 11. Controlling the inner voice. We all have that little voice in our heads, the one that whispers doubt, fear, or greed. Close early. Add more. You're missing out. Successful traders learn to silence that voice by trusting their plan. They've done the preparation. They know the rules. When the voice speaks, they don't argue. They return to the plan. This is why journaling and preparation are critical. They give you confidence to ignore the voice. If you find your inner voice constantly sabotaging you, stop trading real money and go back to practice. Build trust in your system until your confidence is louder than your fear. Lesson 12. Risk management is non-negotiable. If there's one rule that separates millionaire traders from amateurs, it's this. They never risk too much on one trade. Most pros risk between 0.5% and 2% of their account per trade. That means if you have $10,000, you risk $50 to $200 on a single trade. Why? Because it gives you room to survive losing streaks. Think about it. If you risk 10% per trade, 10 losses in a row wipe out your account. But if you risk 1%, 10 losses only cost you 10% of your account, and you're still alive to fight another day. Millionaire traders know it's not about winning every time. It's about staying in the game long enough for your edge to play out. Risk management is your shield. Without it, you're naked in a battlefield. Lesson 13. Build a daily trading routine. Trading psychology is not just about what happens during trades, it's also about what you do before and after. That's why routine matters. Millionaire traders often have a structured daily routine that includes pre-market analysis, checking charts, news, levels, reviewing their plan for the day, tracking their emotions before trading. Are they calm, distracted, tired? Journaling after trades. What worked, what didn't? This routine creates consistency. It makes trading less random and more professional. Think about an athlete before a big game. They don't just show up and play. They warm up, stretch, focus, review strategy. That's what traders must do every day. A good routine also includes self-care, sleep, exercise, and healthy breaks. Trading tired or stressed is like driving drunk. You may not notice the mistakes until it's too late.
Lesson 14. The secret of consistency. Most traders fail not because their strategy is bad, but because they are inconsistent. They follow their rules for a while, then break them out of boredom or frustration. Millionaire traders are boring in the best way. They repeat their process over and over, like a machine. They don't chase excitement. They chase consistency. Here's an important truth. Consistency builds confidence, and confidence builds profits. Imagine flipping a coin. If you have a weighted coin that gives heads 60% of the time, your job is not to win every flip. Your job is to flip the coin enough times consistently for the edge to play out. That's trading. Your system may not win every time, but over many trades, consistency reveals the edge. The problem with most traders is they keep changing systems, hopping from one indicator to another. Millionaire traders stick with their edge, refine it, and execute consistently. Lesson 15. The power of detachment from results. Here's a paradox. The less you obsess over results, the better your results become. Millionaire traders don't focus on making money today. They focus on following their process. They know that if they stick to their plan, money will follow over time. This is why journaling and routines matter. They shift your attention from outcomes to process. Did I follow my rules? Did I respect my risk? Did I execute my plan? When you measure success by process instead of results, you free yourself from the emotional roller coaster of wins and losses. Lesson 16. The danger of revenge trading. Every trader has felt it, that burning anger after a painful loss. You slam the desk, grit your teeth, and think, I'll make it back on the next trade. This is called revenge trading, and it's one of the fastest ways to blow up your account. Here's the problem. When you trade out of anger, you're no longer following your plan. You're chasing losses. You're letting emotions drive decisions instead of logic. Millionaire traders avoid this trap by stepping away after a loss. If they take a hit, they don't immediately jump back in. They cool off, review their journal, and wait until their emotions settle. Remember, the market is not your enemy. It doesn't even know you exist. Revenge trading is you fighting shadows and hurting yourself in the process. Lesson 18. Overconfidence after a win. Losses make us angry, but wins can make us dangerous. Why? Because big wins create overconfidence. You take one great trade, you feel unstoppable, and suddenly you double your risk on the next one. That's when disaster strikes. Overconfidence blinds you to risk. It makes you forget the rules that brought you success in the first place. Many traders lose more after a win than after a loss simply because they let ego take control. Millionaire traders stay humble even after a win. They celebrate quietly, journal the trade, and go back to business as usual.
One trader in Millionaire Traders said, "After my biggest wins, I trade even smaller. That way I protect myself from arrogance." That's wisdom, because the market humbles the proud fast. Lesson 19. Boredom, the silent enemy. Not every trading day is exciting. Sometimes markets move slowly. Sometimes setups don't appear. And that's when boredom creeps in. Boredom makes traders chase trades that don't exist. They enter just to do something. But in trading, forcing action is costly. Millionaire traders know that doing nothing is a skill. Patience is power. If the setup isn't there, they wait. They don't let boredom trick them into gambling. Think about a fisherman. If the fish aren't biting, he doesn't jump into the water and start swinging the net wildly. He waits. Trading is the same. The truth is, most traders lose more from boredom trades than from bad strategies. Lesson 19. Emotional reset. To fight these traps, successful traders use emotional resets. Some take breaks after a series of wins or losses. Some set daily loss limits. For example, if I lose 3 trades in a day, I stop trading. Others meditate, exercise, or step outside to clear their head. Whatever the method, the principle is the same. Reset your emotions before they control you. Millionaire traders are not emotionless robots. They feel anger, greed, and boredom just like anyone else. The difference is they don't let those emotions sit in the driver's seat. Lesson 20. The power of self-awareness. Every trader must answer a simple but difficult question. Who am I when I trade? Self-awareness means understanding your strengths and weaknesses, your triggers and habits. Some traders thrive in fast markets. Others panic. Some handle multiple trades. Others do better with just one. Millionaire traders know themselves. They don't try to be someone they're not. If they hate high-risk trading, they avoid it. If they can't handle news volatility, they stay out during announcements. Ask yourself, do I trade better in the morning or at night? Do I hold positions calmly or panic quickly? Do I get emotional after one loss, or can I handle several? The more honest you are, the more you can build a style that fits you. Many traders fail not because of bad systems, but because they use systems that don't match their personality. Lesson 23. Building mental resilience. Trading is a marathon, not a sprint. That means you need mental resilience, the ability to bounce back after setbacks. Resilience comes from perspective. A single loss doesn't matter in the big picture. A bad week doesn't define you. Millionaire traders think long-term. They see the bigger story. One trader in Millionaire Traders said, "I've lost many battles, but I've never lost the war." That's resilience. You accept short-term pain because you believe in long-term growth. Resilience also comes from preparation. If you manage risk well, no single trade can destroy you. That gives you emotional strength to keep going. Remember, the market rewards those who endure. Lesson 22. Life outside of trading matters. Here's something most traders overlook. Your personal life affects your trading. If you're stressed, sleep-deprived, or fighting with family, it will show up in your trades. You'll be impatient, emotional, distracted. Millionaire traders treat their body and mind like part of their trading system. They exercise, rest, and maintain balance. They don't live glued to the screen 24/7. Think about it. Would you trust a surgeon who hasn't slept in 24 hours to operate on you? Then why trade with money at risk when you're exhausted or emotionally unstable? Trading success is not just about charts. It's about lifestyle discipline. Healthy routines outside the market lead to healthy decisions inside the market. Lesson 23. Detachment from identity. Another deep principle is separating your identity from your trades. Many traders say, "If I lose, I am a loser." That's dangerous thinking. Your trades are not you. They're just outcomes of decisions. Millionaire traders understand the separation. Wins don't make them superior. Losses don't make them failures. They remain steady because their identity is not tied to every trade. This mental shift is huge. It gives you freedom to experiment, to learn, and to grow without feeling crushed by losses or inflated by wins. Lesson 24: The path to mastery. Millionaire traders didn't wake up successful. They spent years practicing, failing, learning, and refining. Mastery in trading doesn't come from reading one book or watching one video. It comes from deliberate practice, day after day, year after year. Think about a musician. They don't master an instrument overnight. They practice scales, repeat songs, and learn from mistakes. Trading is no different. Mastery requires patience. It requires accepting that losses are teachers. It requires commitment to the craft, not to quick riches. Ask yourself, are you practicing trading or are you gambling and hoping? The difference lies in your dedication to learning and improving every day. Lesson 26: The ultimate shift from money to mastery. Here's the deepest truth about trading psychology. The less you chase money, the more consistent you become. New traders obsess over profits. Millionaire traders obsess over process. They know that money is a byproduct of good decisions, not the goal. When your focus shifts from "I must make money today" to "I must follow my plan today," everything changes. Stress drops. Clarity grows. Consistency rises. This is why so many amateur traders burn out. They chase quick riches, but those who focus on mastery, on discipline, patience, and growth, build wealth over the long run. Trading psychology at its core is about maturity. It's about trading less like a gambler and more like a professional. Lesson 27: Lifelong learning. The markets are always changing, and so must you. Millionaire traders never stop learning. They read, test, adjust, and grow. They treat each day as a chance to improve, not to prove. That's why they stay ahead while others fall behind. Proverbs 1 verse 5 says, "Let the wise listen and add to their learning, and let the discerning get guidance." That's trading wisdom too. Stay teachable, and you stay profitable. So after everything we've learned, here's the conclusion. Your real edge in trading is not your strategy. It's your psychology. You can copy someone else's system, but you cannot copy their discipline. You can buy an indicator, but you cannot buy patience. You can learn patterns, but you cannot skip the inner work of self-control. The market is a mirror. It reflects your emotions, your discipline, your fears, and your habits. If you master yourself, you master trading. One line from Millionaire traders sums it up best. Success is not about predicting the market. It's about controlling yourself when you're in it. So here's my challenge to you. Don't just watch this video and nod. Take action. Start journaling your trades. Set strict risk rules. Build a routine. And most of all, train your mind as much as you train your strategy. Because the market doesn't reward the smartest traders. It rewards the most disciplined. So if this video spoke to you, do 3 things. Like this video to help it reach more traders. Comment your biggest takeaway from this series. And subscribe for more insights into trading psychology and success. Your journey to becoming a consistent trader begins not with a new system, but with a new mindset. Stay disciplined, stay patient, and remember, the real battle is not on the charts, it's in your mind.